lựa thương theo khổ lựa thương theo khổ ว่าถอยเลยแม่งเมืองเหล่าสิว่าเลือหล่อจำอย่าปากว่าเลือจะเห่าแซ่เลือแถวอ่ะว่าถอยเลือ
lơ miệng kéo là mới ho nó ăn mò nó bồi
จุดแม่ขอเที่ยวโมกไก่กอพ่อนะว่าจ่อเซ็งแซ่ชาจับหัวมีไก่วงห้วย
Hey guys, what's going on? In this video, we're going to share one stock that is about to drop 30% that could potentially lock you in about 800% in gains if you know how to trade options on this thing. And plus, I'm going to reveal one more stock that can actually make you 4 to 5 times the amount today because it just announced earnings and matches an ideal setup that we keep identifying with the market conditions in the last month. So, with that said, based off the comments in the last few videos, it's clearly a lot of you guys are brand new. Maybe you trade in stocks and you have no idea how to trade options. It's actually quite a different ball game. So we're going to try to bring some light. It actually gives you a chance to learn some more stuff so you wouldn't be making rookie mistakes as a day trader or a swing trader. So with that said, this video is devoted to actually helping you identify some solid chart patterns that point to the next move in the stock. And clearly, I can't share everything with you in just a few minute video here, but overall, you have to understand that the most crucial aspect about the charts is you have to analyze various time frame charts in order to arrive at a high probability trade. Now, this is not the popular type trade that you would see many people talk about. It was actually the least popular trade when we have shorted this particular stock. Of course, we're talking about Tesla. Make sure everybody understands that we have posted the video right here and was hitting 1,800 bucks. That amounted to about 700, 800% returns that same day. Now, at the time, the stock was shooting to the moon. Second time, we explained the same trade, shorting the bounce in Tesla was right here on the chart. So if you take a look at this chart, nobody was really talking about this. But when the stock did reverse after the earnings, as we predicted in the video that was posted before Tesla earnings, okay, all of a sudden caught everybody's attention. Oh, shit, he was right. It did drop fucking 260 bucks. But everybody was bullish as hell. And so sometimes if you can learn how to identify these time periods on a chart, it's going to lock you some crazy returns. That's why most of the people are having a hard time understanding, well, how did this guy take 8,000 to 150K? Guys, it's very simple. It all starts with charts. So what we're seeing in the chart of Tesla right now, it was what was not apparent to many market participants when it was shooting to the moon right here. Now, it's quite apparent now based off a lot of characteristics. Now, first, you have to take a look and see if you can actually identify any type of chart pattern or a resemblance of a chart pattern. Now, Charts Diversity course, we identified 3 solid patterns for shorting stocks. And you may be asking, well, why would you short a crazy stock like that everybody keeps buying? And that's a great question, and I'm going to devote some specific time later this week helping you guys understand how is that possible to continue shorting stocks and buying puts, and with that coming out ahead compared to all the bulls that are trying to continuously play the market on the bullish side. When it comes to options, I'm going to break down and give you some specifics so you can understand mathematically why buying puts when it comes to shorter time frame expirations actually will always outperform buying calls if you know how to utilize this information. So with that said, Tesla chart, the pattern that you're able to identify right now is the head and shoulder, or something that resembles head and shoulder highly closely. Now, the formations of head and shoulders, they have certain characteristics, and some of them are going to be more perfectly formed than the others. This is enough based off the volume characteristics, based off some of the other things I'm going to show you in the chart, to lock it in as a highly as a pattern that highly resembles head and shoulders right now. So with that said, you should know that head and shoulder patterns could produce drops to the magnitude of 20 to 30 in instances, 40% in stock. Now, clearly, you know, even a 10% drop here would tank this thing at least $140, which is a large size move. It's large size move enough for you to lock in at least 200-300% in gains. Now, clearly a 20% move, magnitude of the move, will help you lock in even more substantial gains. Now, what most of the people do, let me just highlight the most common mistake, okay? People only start buying puts when they see shit drop, which is exactly when you should not be doing this. So, first, you identify the pattern. Second, you identify some other reasons why you should be getting into the trade. So in this particular case, there are divergences on the RSI, which again, if you don't know what they are, you're going to miss some of the killer trades, and it's going to be highly impossible for you to repeat what I've shown time and time and time again, and that is taking a small amount of money like 2, 4, 8,000 and turning it into 700-800% winner or over 1,000% winner in just a matter of a few trades. So if that's your goal, then pay very close attention. I'm actually trying to show you the breakdown on the steps that you should be able to take on your own and helping you identify this. And clearly, again, I can't explain to you everything in this video. So if you have further questions, just make sure you click the link below this video and learn more. But the bottom line is there's certain divergences that typically would develop on the chart, okay, pre-existing to a major drop in the stock. Major drop in the stock would consider anything 10% plus over a short time frame. Short time frame would be anywhere from 3 days up to 14 trading days. That would be a short time frame. Now, with that said, some of these moves, they could come in actually within a shorter time frame of under 72 hours. It could happen the very same day. So with that said, we've got the divergences on the RSI. We've got a pattern right here. It's clearly, even if you're a brand new trader and you just barely start getting in, I mean, you should be able to draw a trend line here, which is a series of lower highs that is developing on the chart of Tesla. Now, this is just super basic stuff, guys, but when you combine it with all the other components here in the chart, such as, okay, if you look at the volume, you don't need a magnifying glass here to see that at these levels between $1,400 and $1,700, which we've actually suggested shorting Tesla at $1,690 in that last Tesla analysis video, okay, basically, it doesn't take a magnifying glass for you to see that around these levels, okay, there's more sellers. Look at these green bars. There's plenty more sellers rather than buyers at these levels. So maybe you have been a Tesla bull, okay, which is fine. We're not going to hold that against you. We just want you to make money. If you're a Tesla bull, that's fine. This is just not the time to be a Tesla bull right now because as with our predictions on Bitcoin in the past, people just wanted to write a bunch of shitty comments like, well, why would you short Bitcoin? Okay, without really clearly understanding that, okay, if you're an overall Bitcoin bull or if you're a Tesla bull, okay, it wouldn't hurt you to understand when is actually a better time for you to initiate your bullish positions, okay? And with that said, wouldn't it make sense for you, instead of buying Tesla right now at $1,400, $1,500 a share, wouldn't it make sense for you to actually buy it when it goes to $1,100 or $1,000? With that said, you would be able to own more Tesla shares. So ultimately, this is a highly desirable setup. No, not only that, okay, you can actually make a ton of money on the drop. Therefore, you would even have more capital to initiate a larger bullish position if you're a longer-term bull. But most of the people, they completely disregard that. They just want to be a blind bull and overlooking all these bearish developments on the chart. As a matter of fact, 99% of the traders, they miserably fail in day trading or swing trading because they don't even look at a damn chart. So further breaking the chart down, you already got a bearish MACD crossover right here. Now, typically these type of situations happen before meaningful drops in the stock, considering the stock has not made a large size move in relation to where the stock has traveled all the way from the bottom in March. Okay, there is a bigger move in development right here. Now, taking a look at the accumulation distribution, it highly resembles the action of pretty much across the board here on the daily chart of Tesla, showing you that there's definitely series of lower highs developing, not just on the RSI, not just on the price action, and now you're seeing the same thing on the accumulation distribution. You got confirmation across 3 boards here, guys. It definitely pays to pay attention here. So the next move in Tesla is not higher, and if you have been buying the dip, okay, you need to get the fuck out of this trade because it's about to unwind lower. As you can see, after Tesla reached these levels, despite of announcing great earnings, I know a bunch of you live in shitty comments, but Tesla had great earnings. Nobody gives a fuck if Tesla reported great earnings. Why do you think the stock has gone from here all the way till here in such a short amount of time? It's because of the very expectation of the great earnings is why the stock has already moved up here. Now that the earnings are out of the bag, and yes, the earnings are good, people are taking profits, and at this point, the best of the best case scenarios for Tesla is priced in. And at this point, with the lack of buyers at these levels, a pullback is destined in the shares of Tesla. Now, if you don't know how to specifically trade this information, guys, okay, let me just review the weekly chart with you real quick. Basically, we got confirmation of multiple time frames. I started the video with explaining you the importance of how it's really important for you to take a look at multiple time frame charts. So when you take a look at the weekly chart, guys, we got the same type of repetitive behavior with regards to how Tesla shares are behaving right now. That is repeating the same action from February and March before Tesla dropped from $950 all the way to $350. Okay, so those people who are getting in right here, guys, let me tell you one thing: if you are a bull, okay, unless you're a complete Bitcoin hodler, okay, that's just gonna hold the shit forever and ever, okay, that's fine. That's not a fucking strategy, though. It's certainly not a strategy for a day trader or a swing trader, but if you're going to completely ignore these type of market opportunities, you're going to miss out on substantial gains and substantial opportunities that the market is giving you. So we were actually shorting Tesla right here as well for this magnificent drop in the shares. And again, if you're a bull, you would have been able to buy a whole lot more back at this level, but being able to identify when it's time to get in is what most of the traders, they struggle with. But because of the time, you keep seeing the shares just keep going higher and higher and higher and higher, you're blinded by the price action. And that's where most of the beginning traders, even intermediate, guys, even some of the fucking advanced traders, that's where they lose the vision of what is actually coming next because the price action is just too blinded. So this is where most of the traders actually add into the positions instead of trimming their positions. That is where a lot of traders that are just filing in on the last part of this move, okay, are being caught off guard because the next day, what happens? The shit crashes. Okay, so with that said, okay, we've got repetitive divergence on the RSI. We got an abundance of bear reversal candles developing right now on the chart of Tesla, which is the same condition that we were noticing last time right before Tesla made a meaningful type drop. Now you got condition on the MACD here that's confirmed. I already made a death cross on the daily chart, but here on the weekly chart, guys, it has not done so, but it is creating what is known as a death hook, which is a pre-existing condition right before a death cross is actually going to be formed here on MACD. Considering the accumulation and distribution already shows us that institutional investors have been taking money out while Tesla is handing out here between $1,400 and $1,700. Okay, there's plenty more sellers that could come in. Now, with a ton of competition Tesla is facing, guys, with a ton of political concerns surrounding, Chinese, United States relation when it comes to different companies are doing business in both countries, guys, there's any kind of bullshit that could happen that could cause more sellers to come in. Now, it does not defy the potential projection of Tesla shares after making another meaningful pullback like that to ultimately move higher. But right now, the circumstances are not such. And if you or become a dedicated trader studying this chart, you're going to be able to identify some phenomenal opportunities on both sides of the equation. So everything I've shown you so far, guys, there's about 10 reasons to be a Tesla bear, an expectation of at least 100 to 300 point drop right here. Now 30% clearly would be a meaningful drop of about $400. So the first target price on Tesla is about $1,276. The second target price would be just above 1,000, like 1,050, 1,060 level. So understanding, just the breakdown I've just shown you apparently is not enough to some of the traders. So if you don't understand how the fuck to use this information, okay, and put together a 700-800% trade, this is what you've got to do, okay? There's some components that I didn't cover here that you will absolutely need to understand. And if you don't, just don't take the trade, okay? So if you're not sure how to trade this information to your advantage, make sure that you understand what strike price is going to be the most advantageous for you to get into this trade. What expiration date on the contract is going to produce the highest gain. At which point do you actually want to pull the damn trigger on the trade, and some other details that are going to be highly critical in order for you to stay with the trade and be profitable and actually lock in these gains. If you don't understand any part of this, you have to schedule a 20-minute trading coaching call. It's absolutely free, guys, okay? So click the link below this video and get this done right now so you can become a better trader. Now, ICU, guys, is another trade I promised I was going to give you and show you. Okay, this company is actually, it's got another beautiful bearish setup. And we're potentially looking, depending on what level the stock is going to open pre-market. Right now, it announced great earnings, and the stock is moving higher. Just like if you've seen the yesterday analysis video on Mercado Libre, the earnings report was perfect. The stock was shooting to the moon, and then comes the open, the stock drops $200. Now, you may be thinking here, if you're new, well, how did it drop $200, Leonardo? I mean, the stock overall finished like $50, $60 lower. Guys, when you're looking at Yahoo Finance, okay, if you're a brand new beginner, okay, this is a simple mistake that a trader does. You simply look at the net change for the day. Well, all the action in a lot of these stocks happens pre-market and after market. So, Yahoo Finance is not going to, show you where the stock has traveled after hours pre-market, but just show you just the net change. The net change is not the figure you should be paying attention to when you're trading. Definitely not when you're day trading. It's being able to develop the skill and the ability to capture the larger size magnitude of the move that actually transitioning between aftermarket, the open, and after hours action, understanding where things could actually ultimately end up over a 72-time period frame that could produce returns that most of the traders don't dream about. So with that said, ICU, we're noticing pre-market, it's got identical setup to the chart of Amazon, which we suggested shorting right after the open, after the earnings report. The stock collapsed $80 within like 20-30 minutes. That was good for 500% profit. Now, depending on the strike, again, that's the key. Mercado Libre. I mean, ton of these stocks, like last week, Twilio and RNG, all these stocks, it's the same type of pattern, guys. And ICU basically is up on very low volume pre-market. It trades about $195. Now, pre-existing condition clearly on the weekly chart, guys. You don't have to be a rocket scientist. I just showed you the head and shoulder pattern on Tesla. Okay, so you got ICU right here. It's the same pattern, guys. It's a freaking head and shoulder. And if you don't know how to draw these guys, definitely click the link below and schedule a call so you can understand these things better. Now, as far as the daily chart on ICU, guys, you still got these nicely formed head and shoulder pattern right at the tip of the iceberg where things could really, okay, collapse here for the stock. And when we mean collapse, okay, just because the stock is trading higher pre-market does not mean that it is bullish. When stock trades pre-market higher on lower volume, that gives you a higher probability of an actual reversal during the intraday session from the time frame the market opens to the time frame the market closes. So that is the actual move that you should be targeting. You should be happy if something is actually up on lower volume. And that is such condition with ICU. I'm going to jump just a little bit further here and show you. So as you can see, the stock yesterday closed around 178. So far pre-market, it's at 197.4. Okay, on very low volume, just a few thousand shares a day. A few thousand shares pre-market is being traded. So generally, this is not a high volume stock, but a few thousand shares after the earnings report is just not a whole lot. So there's a high probability of a reversal. Now, the best case scenario is actually wait to see if the stock would pop right around the open, maybe just above 200. Maybe 203, 204, and get in your entry right there. Now, then the question becomes is which strike do you select to make sure that you lock in some gains? So we have all this proprietary data we follow at 13 Market Moves to help you understand how do you select the damn best strike to lock in these gains. So maybe you've been taking your time to watch some of the videos. You look at the daily analysis videos occasionally that we post here, and you're not getting traction. Guys, I promise you, the number one reason the trader would take the same trade and not make the money or not get the same type of percentage returns because they don't know what kind of strike price to select. And it's actually very simple to do if you understand the volumes of the contracts that are being traded the prior day, within the first few days before earnings announcement, and also keeping track of the data right when the stock opens for trading in the morning. That could give you an extra tip of as far as specifically what would be your best strike price selection. So if you're clueless how to do that, again, we can help you with that, and that can help you lock in on the same type trade, okay, because we're talking about a directional reversal here, a trend reversal opportunity type trade, but the strike price could make a crucial difference in the outcome of your trade. So one more time to review this. This is actually very similar to the Tesla chart, different time frame, different pattern, same pattern, but different time frame of the pattern development. In the Tesla, we basically outline last 50 days, there's a head and shoulder formation. In this one, it's a much more meaningful head and shoulder pattern because it's been developing of a much longer time frame. And you already got some more bearish action here in the stock because it failed to bounce out. This is pretty much the entire market condition right now. Stocks are failing to bounce out of these, what's probably in the news lately, been hearing a lot, oh, the golden cross, bullshit. There's instances in the market where golden crosses do not guarantee a further move higher in the stock market, such as in the case with the stock. As you can see, temporarily, yes, it does go higher, but then look at these beautiful trading opportunities on the short side. There were so many of them, and we're about to get one more time. So as you see the stock basically popping higher, okay, that is your ultimate ideal entry. You don't want to buy puts, okay, when stuff drops because you're going to end up paying more. That's why it's going to be very difficult for you to lock in returns 5, 6, 800%. Okay, and for those of you guys that are locking in like 10, 20%, guys, you really need some fucking help because there's no reason to be trading options trying to lock in 10, 20%. If that's the issue you're struggling with, clearly you don't understand. You know, a lot of times it has to do with your strike, expiration, you know, your entries and exits. So, guys, if you're not locking in crazy gains like this that the market is giving us right now on the short side, you definitely need to get educated. So with that said, you've got the def cross developing right here. You've got similar volume characteristics to that of Tesla. You've got already a def cross right here on the MACD. The only concern is the abundance of sellers that could come in. Therefore, we're not targeting the stock, let's say, to drop after the pop to 200. We're not targeting it to reverse and drop all the way to maybe 150. But a reasonable size move, maybe to the extent of about 20, 30 bucks after it pops, okay? And that's where you really should be calculating the size of the move, okay? Not from where the stock closed yesterday, but what is it doing today? So this one is already open at about $20 higher. It could reverse those moves, actually making a move 11 formation. Now, in some instances, stocks after earnings not only will make a move 11, but they will continue on a move 2 formation. Now, clearly, understanding that is crucial in order for you to set your targeted entries on such a trade. So, guys, if you don't know a 2 or an 11 or what the difference is or how the fuck to trade them intraday, guys, you're missing out on some crazy stuff. But without understanding all the details, just let me help you with this basic stuff. You have to buy puts on the bounce. Write it down, put it in your fridge. Don't do nothing fucking stupid by like buying the lows of the day. That's what an amateur does. That's why you're the type of person that's leaving shitty comments because of the lack of the understanding about how to trade this basic information. So write it down, put it on your fridge, put it in the office, put it wherever you got to do, okay? And make sure you are not buying puts, okay, at the lows of the day, because that's a sure way to lose money. The best condition to buy puts is on the bounce. Bounce means when stuff goes higher, not lower. But yet, what an amateur trader does is once they see the stock go higher in the morning, that's the last thing that they're going to do. That's the last thing that they're going to want to do is buy puts. But that's what it actually takes in order to make money when you're day trading or swing trading. It's your exits and entries is going to make you the money, okay? It's the understanding which strikes. It's understanding a lot of stuff, basically, that briefly touched upon in this video, and understanding clearly which direction overall, not what's right now, not what's right within this minute or 5 minutes or 10 minutes, but where overall move is going to develop despite of what you're seeing in your screen. That's what will get you paid. In order to do that, you got to know charts divergences, you got to know pattern recognition, you got to know the 13 markets move and how the fuck to trade them. So if you don't, okay, make sure, again, schedule a 20-minute coaching call absolutely free by clicking the link below. Guys, I got to go. Market opens up in 34 minutes. Do you know what to do? If not, take action. Click the link below. Let's roll. I'll catch you in the next video soon.